What if one of the world's biggest economic powers is silently collapsing? Not with a bang, but with a bureaucratic whimper. What if the European Union's greatest threat isn't war or crisis, but its own design? Today, we're talking about a question that economists, politicians, and citizens across Europe and beyond are asking: will the European Union fail? Not in a dramatic explosion, but in relevance, competitiveness, and economic power. The EU is massive, spanning 27 countries with hundreds of millions of consumers, yet it faces rising threats internally and externally. In this video, we'll break down the economics, the politics, the pressures, and the key vulnerabilities that could determine whether the EU thrives or fades in the decades ahead. We'll open the question: can Europe really keep up in a world of superpowers and technological revolutions? The European Union stands today as one of the largest economic blocs in the world, a union of 27 countries sharing trade, regulations, and, for many members, a common currency: the euro. Its purpose was clear: peace through economic unity, to prevent another devastating European war by binding nations together through shared markets and mutual interests. But in 2025 to 2026, that purpose faces a serious test. Global dynamics are shifting. With economic competition from the United States and China intensifying, supply chains fracturing after COVID, and geopolitical tensions rising from Russia's war in Ukraine. Recent data shows modest growth, not collapse, but growth that pales compared to global rivals. The Eurozone economy expanded modestly in late 2025, and unemployment fell to a joint record low of about 6.2%. Yet this growth is fragile and weaker than in the US or China, where innovation ecosystems and market dynamism are far stronger. The EU's economic resilience masks deeper problems: productivity stagnation compared to the US innovation gaps in sectors like AI, robotics, and semiconductors, heavy reliance on external suppliers for critical technologies and raw materials. All of this raises the first big question: is the EU growing or merely hanging on? One of the EU's biggest weaknesses isn't external, it's internal. The EU cannot act as cohesively as its competitors. Despite decades of integration, major barriers remain: trade frictions within the EU itself, slowing down capital and commerce; regulatory fragmentation that inhibits startups and slows innovation; political fragmentation, where nations pursue divergent priorities rather than unified strategies. Christine Lagarde, president of the European Central Bank, put it starkly: Europe's economy is built for a world that no longer exists, and without urgency and reform, it risks long-term decline. While the EU excels in certain sectors, automotive, aerospace, and advanced manufacturing, it lags significantly in digital technology and AI. American tech giants and Chinese innovators dominate the fields that define the future economy. This isn't just about gadgets. It affects productivity, jobs, and wage growth. Europe hasn't produced a major global tech powerhouse comparable to Apple, Google, or Huawei. Investment in research and development is lower, and risk capital for startups is less abundant compared to the US and China. This technological gap is not just economic. It translates directly into geopolitical influence on the world stage. In response to COVID's economic shock, the EU launched a massive €955 billion recovery fund, one of the bloc's most ambitious economic programs ever. But implementation has been uneven. Large portions of funds remain undistributed. Bureaucratic hurdles and skills shortages have delayed progress. Some countries struggle to meet reform milestones, slowing investment in transformative projects. This reveals a core reality. Big budgets are not the same as big progress. The EU imports nearly all of its rare earth elements and critical minerals essential for batteries, electronics, and renewable technologies from outside the bloc. This dependency creates vulnerability, supply chain shocks, strategic leverage by global competitors, delayed clean tech transitions. If Europe cannot secure its own supply of critical resources, it may lose out in the global clean energy and technology race. Europe's economic future is tied up with giant economies like the US and China, and that relationship has become tense. Trade wars with the US, involving tariffs worth tens of billions, threaten cross-Atlantic commerce. Meanwhile, EU-China economic ties are complicated by geopolitical competition and supply chain dependence. This means Europe is caught between two giants, neither of which wants to slow down. Another core challenge is disagreement within the EU on what the future should look like. There are two main visions: rapid expansion, especially in Point 1 Eastern Europe, to counterbalance Russia and strengthen collective power. Cautious, staged integration to avoid overstretching institutional capacity. These contrasting philosophies risk slowing decision-making and reducing Europe's ability to act decisively, which is essential in a fast-moving global environment. Europe's innovations in regulations such as strict digital protections, AL laws, and environmental standards are often seen as world-leading. But these same regulations can also slow the growth of domestic champions when compared to US and Chinese companies that operate in more flexible systems. For example, EUAL regulations risk slowing innovation if not crafted with future competitiveness in mind. Digital markets struggle to foster European giants of the same caliber as American or Chinese monopolies. In a world increasingly driven by tech, this is a problem with long-term consequences. Experts like former ECB President Mario Draghi warn that while the EU has good ideas, implementation is too slow, often bogged down by bureaucracy. The result is a paradox: strong fundamentals, a huge internal market, educated population, social stability. Weak execution, slow reforms, and fragmented policy alignment. Europe risks being too stable to adapt, yet not bold enough to lead. So, will the EU fail? Fail is a loaded word, and the answer isn't simple. The EU is not collapsing overnight. It is still one of the largest economies on Earth. Its currency remains a major global reserve, and its market remains massive. But the real question isn't collapse, it's competitiveness and relevance. Will the EU continue as a global economic leader? Or will it slowly fall behind America and China, not because it lacks talent, but because it struggles to adapt fast enough? The EU is not failing tomorrow, but it faces a long battle to remain globally relevant. It has structural strengths, a huge market, stability, resilience, and social systems. But it also has structural weaknesses: slow decision-making, external dependencies, and innovation gaps. If reforms succeed, if the EU modernizes markets, reduces internal barriers, and enhances technological competitiveness, it can be competitive and coherent. If not, it risks becoming a second-tier economic power in a world dominated by faster, more unified giants. The EU's future isn't doomed, but it's definitely not guaranteed either. And if you enjoyed the video, make sure to like and subscribe, and check out the channel to find more amazing and new videos.